WTI wrapping up its best week since the end of March. A month ago, the chartmaster said it could be headed to the mid to high 80s. Well, it's at $85 now. So what's next? Carter Worth of Worth Charting is back with an update. Hi, Carter.
Hi. I think you just stick with it. Energy, obviously a very volatile area of the market. And of course, as all commodities are, WTI is prone to headline news. But let's look at oil, and then let's look at the OIH, the drillers. So one way to draw the lines, lines are a judgment, right? Mine, of course, because I drew these, and one can draw them any way one wants, but that's what my eye sees. Let's put in a downtrend line. And what we have here in this second iteration is the first chart combined with a clear move above that downtrend line. It's a reversal formation. We had energy at crude at 140 a barrel, Ukraine invasion, and of course it drops to almost 65. Here we are at 85, and I think we're going towards 90, and I would just stick with it. But as it relates to the energy shares market, OIH really took it on the chin, dropping some 95%, if you can imagine such a thing, to the COVID low. But then look at that same chart with another way to draw the lines. These are weekly. We've moved above the downtrend line, in effect, from the peak to the trough. And so then final chart, same chart, but just another way to draw the lines. If you just examine the strength since the low, it's been very orderly, very sequential, and we have bounced to the penny off that minor uptrend line for the past year and a half. I think you just stick with it. OIH, dominated by Schlumberger, Halliburton, and Baker Hughes.
It's almost in the right order for OHIO, game day tomorrow. Anyway, thank you, Carter. We'll see you in a few minutes on options action. We're going to trade this. Steve, I'm going to turn to you. What do you think when it comes to WTI or the energy equities themselves?
I'm more bullish, so I agree with Carter. I'm more bullish on the actual commodity than I am on the underlying equities. I think the equities are more efficient. Tim's been good at pointing this out. The equities are the most efficient they've ever been, but at a certain point you get to a declining sense of revenues that are coming off of those efficiencies. I do believe that the commodity will probably be range bound. I think the lid will be 100 on oil this year. And if you look at, you have to remember, the U.S. has to replenish their reserves.
Sure.
So they're going to be a buyer. The Saudis are going to cut back. The OPEC, it doesn't matter. Whenever OPEC cuts production, you have to actually buy sell the commodity because it's always inverse. So I'm not worried about that. I think the U.S. will probably just put a bid underneath this market for the commodity itself.
Karen, when you look at the price of WTI and it was up, 2% today, right around 85, does that tell you anything bigger beyond what we're seeing with OPEC and the Saudis? Does that give you any economic clues?
Well, it's interesting to me. I mean, it's a big move, and so therefore gasoline is up. And so we've been talking a lot about the consumer on there. We'll talk about that more, but that's something that I'm aware of. It's not a great thing. It's interesting to me how strong oil is worldwide when you consider what's happening in China. And if they were, if their economy improves a lot, that would make me think, of course, there's more upside for oil. I've been playing it through the OIH. It's done okay, not as great as the underlying. But I think if oil is just range bound, the OIH should really do well.